Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on PCLN NVDA TSLA NFLX CMG. So PCLN, bears still in control. We backtested and rejected from the 100-day moving average resistance. And PCLN is a good bear to play just because if the market is showing weakness, we have not established a support level yet from the reaction to earnings. So we're fresh off of that bearish momentum. Then we have the market weakness contributing to further downside. So we have an inside bar to be watching on Monday. Support is 1845. Resistance is 1867. If we see a bearish break, the next support is down at 1836 and then 1800, which is why it is a good bear play in my opinion if we see market weakness on Monday. And if we see SPY break its inside bar, bearish as well. So PCLN on the weekly time frame, middle Bollinger Band lost for the first time in 2017. And this is the first time where we've lost this. We lost it one other time in the past year and a half. So if we see further downside and another red week, then we are going to be noticing some shifts here. We have a bearish TCG cross on the verge of a bearish. Well, we're on the verge of a bearish TCG cross. We're already seeing the bullish or the bearish MACD cross. If we see this bearish TCG cross follow through, it will be the first time, again, in a long time that has played out. But it's going to have to take another solid red week next week. The key support to maintain the higher lows on the weekly time frame is 1781. We're still well above that level, but losing that level would be a very significant shift in momentum. NVDA gap down with earnings and a decent bounce off the low, but we rejected from the 50-day and the lower Bollinger Band resistance. If we cannot close over the lower Bollinger Band resistance on Monday, we're looking down at support of 152.91, and then there's a gap down here at 150, make that 147.50 is the next level of the gap that I would be watching if we get a bear break down below the low of Friday. Weekly time frame for NVDA, no big red flags at all. We're starting to see the MACD close in for a potential bearish cross, but anything above 138.58 maintains a higher low on the weekly time frame. That's a key level of support going forward. Tesla on the daily time frame, healthy consolidation, bulls showing up. It was one of the more bullish days on Friday, and that's a healthy candlestick after a couple days of consolidation following a breakout on earnings. So it's a completely different scenario, the names that have bullish momentum following their earnings like Apple and Facebook, compared to names that have bearish momentum like Amazon, Google, and PCLN. And obviously Tesla is one of the bullish momentum names. So key support is now 353.62. The bulls want that to be our higher low. Have to see a green day on Monday and a break of 361.26 to give confidence that that higher low has been established now. Otherwise, I'm still looking down at 352.75 and then the 50-day moving average as support. Weekly time frame, however, is a bearish reversal doji. We need to keep this on watch because it is an equilibrium pattern setup that I'm looking for. High, low the pullback, potentially our lower high. If we see a break of the low of this week of 352.75, we'll be on our way to confirming this bearish reversal candlestick, and we'll be looking at the middle Bollinger Band weekly support in the low 330s to be tested after that. Netflix on the daily time frame, inside bar as well, exponential resistance dropping down, and Netflix is seeing some weakness, but we have this inside bar to be watching. So support is 169, resistance is 172.58. Still keeping an eye on this gap to fill at 163.55. If we see continued weakness in the market and the tech sector, that will be our target. There is also a gap to the upside at 177.45. So depending on which way we break on Monday from this inside bar, that can shift our mindset into which gap to be looking at to fill first, essentially. The weekly time frame is seeing healthy consolidation, still holding the 8-period exponential support, and still 3 weeks of consolidation, only giving back about 2/3 of the last bullish week to the upside. So very healthy uptrend. No sign of breaking it. We would have to break 144.20, 144.25 to be exact, and we're nowhere near doing that. CMG, another bullish reversal candlestick. Same candlestick that we saw 2 days ago that had no follow-through nor confirmation. So we need to see the bulls break the lower high pattern on the daily by breaking 328.76 and seeing another solid green day. We have not closed above the 8-period exponential daily resistance in months at this point, and that's going to be down in the 334 range on Monday. Have to close over that level before thinking bullish on this daily chart. Weekly time frame still very weak, no bullish reversal candlestick. oversold on all kinds of time frames, but the RSI hasn't meant much as the fundamentals and the bearish sentiment is overriding that at this point. So there's no sign of the bulls on the weekly time frame. We're at 4 or 5 year lows, and it's really going to require the exponential support to become, or the resistance to become support. And we're going to not just we can't just come off our low here and expect to change the trend. So even if we do start to bounce, we're going to be looking at 358 resistance and anticipating a lower high compared to that level. Then we'll have to form a higher low and a higher high to shift the trend and the momentum. So we're a long way away from a momentum shift on the daily time frame. This is just first signal number 1, which has been negated multiple times in the past, so we know not to put too much weight into that. So that's what we've got heading into next week. I hope you have a good rest of your weekend, and we'll see you on Monday.